Fund Forum 2025 trwa, ponad 500 uczestników, prawie 30 ekspertów i najważniejsze tematy rynkowe, a moim gościem jest Istvan Al Hilal z Fidelity International. Hi Istvan, it's great to have you here at Fund Forum. Let's talk about Polish market. Polish fund market, it's dominated by local TFIs related with banks. Foreign funds are actually officially available, but they are not, let's say, in front line of distribution. From your perspective as an international company, what do you think about Polish fund market from the distribution perspective point of view? What helps you most, and what makes building business here difficult?
Well, thanks for having me. So the Polish market is definitely one of our key focuses. So we've been looking at the market for more than 1.5 decades. It's not an easy market, but it's very rewarding. So what makes us, I think, ahead of our competition in asset classes where we actually have a lot to offer is that we build that kind of market intel for the last 15 years. And we are using it very much with all our new product launches and with our marketing activities. It's pretty much orchestrated strategy we put together, and it seems to be working. Mm-hmm. When you look at, the question was also about domestic funds versus cross-border funds. It's not that much different compared to other countries in the region. Actually, also in the Western countries, it's not so different. So all the local products are prioritized over cross-border, but there's always room that we have the space to deliver and to sell our own strategies. We are actually, what we do is very simple. So we bring in global expertise, global exposures with a locally wrapped solution. So whatever we do is actually global markets put into a local shape, and that's what we actually do in the whole region. Particularly important.
But from your perspective, why foreign funds are not as popular as they could be, especially when you compare it to with the inflows to the local TFIs? Why is that so?
I would not say we are not popular. What I would say is that we don't have our own distribution channels. So everywhere we go, we are an outsider in the beginning. And our major aim is to be number one after the local asset manager or the home asset manager. We call it, whether it's captive or non-captive sales. So definitely we are non-captive with these clients. And usually we tend to be in the first or second position when it comes to their non-captive distribution partner.
I'm wondering which channels, distribution channels, are the most important for you in Poland?
I would not say that some are more important than the others, but obviously we are focusing on a couple of segments. And mostly lately, particularly, we started to focus on the fund seller market. So in the beginning, when we started to open up the region, we definitely were focusing on the fund buyer market because it was, bigger ticket sizes. We could have less conversation. But later on, we have realized that the fund seller market is key to grow market share.
Polish investors, retail investors especially, prefer safe options. I mean, bank deposits, bonds, and fixed income funds. Which products from your offer address the needs of safe investments?
Well, I would not highlight a particular product, but we have a wide range of bond products, fixed income products as well. Mm-hmm. So we have more than 10.
More global.
Yes, it may be focused on one region, let's say Asia or let's say the US, or particularly, whether it's total return or whether it's benchmark following or benchmark agnostic. So we definitely have those solutions. And if I look at our book of business, our book of business is also bond focused at the moment, which is, by the way, the whole Polish market looks like that.
Yes. Also, Polish investors tend to prefer currencies hedged investments. Fidelity offers PLN hedged share classes. How important is that part of your business for you, and do you plan to expand it somehow, and how?
We currently have 28 share classes, which I think is enough. We might add one or two, a couple, we'll see. We have added 5 over the next 18 months. So we are building those blockbuster exposures locally, and most of the flows actually turn to go into that direction. So I think those were very, very successful launches. And what we can see definitely is there's a need for zloty hedge share classes, and we as a company are very open to come up with new ideas. It's also what we say is it's an open discussion with clients whether they want to have a particular strategy, Polish zloty hedged or not. But that's actually true for the whole region. So we are there to accommodate local client needs. And then we, of course, build a business case and we come out with a strategy. And we've been very active launching new solutions.
Actually, I'm wondering, this thing, it's something specific for the Polish investors, or generally for compared to the rest of the region, the currency hedged investments are also this much popular as in Poland?
In some markets, it's more important.
Even more?
Yes, in some markets like Czech Republic,
okay,
we have close to 80% of our business in Czech kron hedge share classes. In some other markets like Hungary, we still have a couple, but it's less important. It relates to how the local population, how local investors are looking at their own currencies. Obviously, Polish people like their zloty. Lately, it's been appreciating, so the hedge share classes were very, very beneficial. But the good thing is that we have, in the whole region, different strategy tailor-made for the different markets. So, for instance, just to give you an idea, in Hungary, half of the share classes are hedged, half are non-hedged, because the Hungarian investors have a different mentality towards their currency, the HUF. Czech Republic, as I already told you, it's almost all of our share classes are denominated and also hedged to kron. Here in Poland, I think out of the 28, 25 is hedged basically. So here it's also there's a dominance. But what is important that the hard currency part of our business in Poland is also getting stronger and stronger, so growing. So it's not just the Polish hedge share classes where we see inflows.
Let's talk about the similarities and differences between Polish investors and the investors from the rest of the region. Do you see any similarities and differences between us?
Definitely. So when you look at the size of the market, Hungary and Czech Republic are very similar in terms of size when it comes to mutual fund industry. Poland is about 50% bigger than those two markets. I mean, the whole fund market. But what we can see as a major difference is the risk awareness. So obviously, as I told you, 60% of our books is in fixed income solution here, whereas in Czech Republic, 80% is in equities, and in Hungary, it's 75% equities. So, and it is changing over the years. So for instance, in Czech Republic, we've seen a massive inflows into equity funds. So there the local sentiment and local feeling about riskier asset classes are definitely changing. Whereas in Hungary, it used to be a very, very risk-taker country, or from an investor point of view, and it still is. But just as a final note on this, also in Poland, we have seen a pickup in terms of equity sales lately. So we are very, very successful with our equity income range.
Looking 5 years ahead, which solutions will be the most important for you? Maybe you plan to put some new products to your offer in Poland, and if so, what it will be?
So if it's about Poland, then I would say we will keep on promoting our more conservative solutions within all the asset classes. So when it comes to fixed income, there as well like short duration or maybe some mid-duration products with some global exposures or US exposures that would, I think, remain in focus until rates are up, you know. So that is also important. Rates will definitely change. So they go up and down. Now they are going down, but in general, that is I think a major pillar of our strategy. When it comes to equities, it's definitely the conservative end of equities what we try to and what we are actually pushing or promoting actively. And when it comes to absolute return, there as well, it's not the ultra risky solutions that we would vouch for, but definitely the market neutral type of strategies and those that are actually representing a much lower risk profile.
How many assets under management do you have in Poland?
I would not give you a certain number, but if I look at the whole region, Poland is about 30% of our books, and it actually was much lower weight 2 years ago, 3 years ago, so it's dynamically growing, and Poland is now getting close to, and I hopefully over the next couple of months or quarters we will see the AUM growing above $2 billion.
Okay, so thank you very much for the discussion. And yeah, thank you.
Thank you so much.
Thank you.